In this video, we'll be discussing with you how you can use divergences to find buying and selling opportunities in the stock market. We'll be discussing with you what is a divergence in particular, what are the different types of divergences that exist, how you can spot a particular divergence in the market with the help of technical indicators. And in this particular case, we'll be discussing the MACD indicator with you. We'll cover the MACD indicator with you very briefly because there's already a different video which is live on our channel which discusses the MACD indicator with you. And then we'll discuss how you can combine this to understand bullish and bearish divergences in the market, and how you can take entry into a particular stock and set up a stop loss to avoid losses in case your position backfires. Now, very quickly, basically starting off with what a divergence is. So divergence in the market is basically whenever you see the price of a script or index going in a different direction from what a technical indicator is basically trying to convey to you. So for instance, if you see the price of a stock is increasing, but you are following a technical indicator which shows that the momentum of the price rise is decreasing, then you end up seeing a divergence in the market which might indicate a trend reversal. So for instance, if you're seeing a price rise and the momentum is decreasing, that's when you actually see the divergences. Uh, there are two kinds of divergences very briefly. Regular divergences, which help you identify tops and bottoms of a market, and hidden divergences, which help you identify pullbacks in a particular stock. For this video, we'll be discussing the regular divergences, which will help us identify tops and bottoms of a stock and combine it with basic. And for studying in detail, we'll be using the MACD technical oscillator. And we'll be focusing just on the histogram. We won't be focusing on the signal line or the MACD line, but just on the histogram, and we'll be seeing the stock of PVR on a 15-minute time frame to understand it better. Anything below that generally might have a higher chance of giving you a false signal, and therefore studying it on a 15-minute graph might increase the odds of the trade being successful. So very quickly, before we go into practically discussing about the charts of PVR and how we've seen the divergences here, very quick update on the theory part of it, about how to spot a divergence and what would be the bearish and bullish divergence for this. So when you are trying to identify a divergence, right, first thing you have to do is set it up on TradingView as an indicator. You have to add MACD as your primary indicator, and you have to start looking for opportunities in the market where you see such divergences, such as the price of a stock increasing or the price of a stock decreasing very sharply. And then you see the MACD indicator and you see specifically the histogram. You can remove the signal and the MACD line. Now if you see basically the stock of PVR at this particular case, you see the stock price rose very sharply from 1814 on 4th of November to around 1860 by 7th of November. But the stock basically, while the volume was high, the price rise was high, but you will see a bearish divergence on the MACD indicator. You see the MACD indicator at somewhere around 4.3 on 4th of November and around 1.6 at 7th of November. So you see a very clear divergence where there's an increase in price, but the MACD indicator indicates a loss of momentum, thus indicating that there might be a change in momentum at this point. Now, the important thing here is to identify how and when you will enter the trade, and how and when you have to set the stop loss if the trade is going in the other direction. Before we go into the details of this, a quick small update for all of you. We are not SEBI registered analyst or advisor, nor do we have any active position in the shares of PVR. Before you do any research, please complete your before you take any position, please complete your own research. And this video is primarily for education purposes, so please keep it that way. Now coming back to this, so basically, once you've seen a particular divergence happening, in this case a bearish divergence where you see the price increasing and the MACD indicator histogram losing momentum. You have to wait for the histogram to turn red. That will be the first indication that you might see a potential opportunity to take position. Once you see the histogram turning red, if you're slightly aggressive in the market and you are a high risk taker, you could take position immediately, or you could wait for a bearish candle to reaffirm your bearish position in the stock and then take position. Now, ideally, if you would have taken position, a short position in PVR on 7th of November at around levels of 1850, you would have seen a good downward momentum over here. The stop loss is very simple. This previous high of the trend is where you should set the stop loss. So in this case, 1860 would be a decent stop loss to have. If the share breaks this level, you might see a further rally and the trade might go in the other direction. But below that, you might see further weakness. And again, the first support point for the share is where you should ideally take off some part of your profit, and then of course revise your stop loss subsequently. So in this case, you would likely to take an entry at levels of 1848, and the share had a good strong support at levels of almost 1786, 1785 is where you could have booked profit. And coincidentally, that's where we observe a bullish divergence in this share as well. So before we go to the bullish divergence, just a quick update in the theory part of it. So first, you use TradingView to set up your MACD indicator. Try to identify the histogram to understand the peaks of the share, and try to identify where basically the histogram is also peaking as well as the price is peaking. For bearish divergences, you have to look for areas when the price is increasing and the histograms is making a smaller peak. As discussed, this indicates that basically the share is experiencing a bearish divergence. The price is increasing, but the momentum is decreasing, and it might lead to a further reversal. Now, you take the entry when the histogram switches from the green to red, and you set the stop loss as the current trend high. For bullish divergences, it'll be the exact reverse of this. You basically find areas where the price is decreasing and the red histogram peaks are basically declining in trend, which will indicate a bullish divergence. That is, the price is decreasing and momentum is also decreasing and might lead to a reversal. In this case, you take position when the histogram switches from red to green, and the stop loss would be the current trend low. So in case of PVR, basically if we go back to the chart and see, you see lows of 1820, then over here around levels of 1800 and 1780, and you see the corresponding histogram making a bearish divergence, minus 3.6 to minus 1.5 and 1.3. Very clear divergence if you plot the trend line, and that's when you get an indication of bullish divergence. Now, you wait for the histogram to turn from red to green. You see a potential buy area, and you take position somewhere around 1800 levels, and you get a good swing up to levels of almost 1850, 1855, which again becomes a good strong resistance zone for the share, and you might want to take off your profits once again. Clear bearish bullish divergence followed by a good strong upward trend. So that's it for now from our side on using MACD indicator to find divergences to spot buying and selling opportunities in the stock market. If you've enjoyed this video, then please like it, share it with your friends, and subscribe to our channel. If you guys trade actively in the share market and haven't opened an account with Zerodha yet, then please find the link to open your account with Zerodha in the description of this video and open an account today itself. Zerodha is basically a discount broker which doesn't charge any brokerage for delivery-based trades, and the brokerage charged on intraday trades is extremely minimal. So please find the link and save on your brokerage charges today itself. That's it for now from our side. Thanks for watching once again. If you have any feedback, please feel free to comment in the section below, and please don't forget to like, share, and subscribe to our channel.